Do you want to make money in the stock market passively? Well, you have just found the right place. Most people are ignorant about how the monetary system works. No wonder Henry Ford, the founder of Ford Motor, said, "It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe that there would be a revolution before tomorrow morning." The stock market is one of the most important means of building generational wealth. Hence, it is essential to discover the ways people use to make money investing in the stock market during this recession. This video will explore ways you can use the stock market to earn passively even during a recession. So without further ado, let's get started. And make sure you watch this video till the end to ensure you make the most of the current economic downturn. Firstly, what is the stock market? A stock market is where people can buy and sell shares of companies. These shares represent ownership in a specific company that grants you a share of a portion of the company's profits. The larger your share is in the company, the more profit you will make when the value of the company's share increases. The stock market is a basis for building generational wealth because it allows individuals to invest money in a company they are completely optimistic about. So, people who own shares in a company are referred to as shareholders. What is a typical day in the stock market? The way the stock market works is that you buy publicly traded company shares on the stock exchange, and then those companies sell their stocks to investors like yourself. You can purchase the share through an index fund such as Vanguard and BlackRock, or buy stocks through a broker like Webull. When an increasing number of people compete to buy shares from one company, its share price increases because there is more demand than supply, and investors are willing to pay more. Vice versa, as fewer people are interested in buying shares of a company, its share price decreases. With these market dynamics, it is noteworthy that the share price is often driven by the investor's perception of the company's future earning potential, which triggers greed and buying or fear and selling. However, the current actual value of the company may be different from the share price, especially during fear-driven sell-offs during recessions. Great investment opportunities can open up to you, but watch the full video if you want to learn more about value investing and other approaches of making money passively. A major percentage of stocks in the exchange are held within an index fund, an investment vehicle that tracks the performance of all publicly traded stocks at once. This means there's no need to research individual companies before investing. The best part? An index fund gives 100% exposure to all markets at once, so your returns will automatically be diversified across various sectors and industries for minimized risk. But make sure you pick up an index fund with low fees. Type of companies in the stock market. There are several types of companies that trade on this exchange, including large cap stocks, small cap stocks, micro caps, or even nano caps. These companies can be public or private. If they are public, they must be registered with the Securities and Exchange Commission, SEC, and listed on one of the exchanges such as NASDAQ, New York Stock Exchange, or OTCBB. 5 ways to make money from investing in stocks. With proper research, investing in the stock market is simple. In this section, I will explain various ways you can make money in your sleep by investing in companies. Buying individual stocks. Before you decide to invest in a company, it is crucial to research the company and its products before buying individual stocks. If a stock is listed on the New York Stock Exchange, NYSE, or the NASDAQ, it will have a company name that includes the word stock. If a stock isn't listed on either exchange, check with your broker to find out if there are any other ways you can access this information. Once you've decided which companies interest you the most and what type of investments they make, for example, manufacturing, begin researching them online or in print publications such as Barron's. Look at their financial statements, read their annual reports, read news articles about them, ask questions about their business practices, etc. Once you're satisfied with the company, you can now contact a reliable broker to help you buy the stocks of the company of your choice. You can also buy directly from the company if you don't want to buy through a broker. Investing in index funds. If you want to avoid the risk and pitfalls associated with investing in an individual companies, then investing through index funds is the way forward. An index fund is a mutual fund that tracks an index of stocks or bonds. These funds are simple, low cost, and easy to understand. You can use them to build your portfolio without worrying about the price of individual stocks. An example of an index fund would be Vanguard's Total Stock Market Index Fund, ETF-VTI, which controls a broad market basket of equities worldwide. Index funds are a safer way to invest in the stock market than buying individual stocks because they don't require special investment skills. You can buy through a mutual fund company like Vanguard's Total Stock Market Index Fund, ETF-VTI, which tracks the S&P 500 index by owning all 500 stocks in the US, both large cap and small cap companies in Europe. Investing in index funds in the long term can also make your life easier when it comes to following the stock market news. Adjusted for inflation, the 100-year average return, including dividends, of the S&P 500 is 7.28%, which equals doubling the investment every 10 years. Accordingly, same long-term investment strategies require minimal work, such as rebalancing your portfolio once per quarter or even longer, which is a very passive way to make money. Let your money grow tax-free using a Roth IRA. Aside from investing in index funds and individual companies, you can invest your retirement savings in the stock market and make a profit. Investing in low-risk stock with a Roth IRA will help you make more money in the long run because your investments can grow tax-free. If you want to know more about tax-advantaged accounts like Roth IRA and 401k/403b accounts, please let us know in the comments section below. Value investing. Value investing is an investment style that seeks to buy stocks at a price below their intrinsic value, also known as book value. Hence, the stock may be undervalued and therefore more likely to outperform. It diverges from growth investing, which looks for companies with high growth rates to perform positively in the future and grow in value, as the name says. The value investor, emphasizing buying shares of companies with low prices relative to their assets or earnings. The goal is to wait for those stocks to rise in value before selling them to make money when they do rise. Value investors are risk takers because they believe that stocks are cheap if they're trading at prices below their intrinsic value, company's true worth. A company's intrinsic value is its future earnings power, discounted by the current market's expected growth rate. But how do you calculate if a stock is undervalued? It is necessary to calculate a stock's real value for value investing. This analysis can help to make better decisions on the best stock option to choose from. There are a few key ratios that you should be looking at when analyzing a company's stock price. The PE ratio, PB ratio, and PS ratio are some of the most popular ones. The first is to look at the price to earnings ratio, PE. Shows how much money investors think a company can make in a year. A high PE could mean that investors believe the company will grow in value and make more money than they have today. The next thing you should do is look at its price to book ratio, PB, which compares the current share price to book value per share. If this number is higher than 1, it's overvalued. If it's lower than 1, it's undervalued. PS ratio. This looks at how much investors are willing to pay per share of a company. The higher this number is, the more undervalued a stock is. Please let us know in the comments section if you want us to make a more detailed video about calculating a company's stock price value. Purchasing dividend stocks. Dividend stocks are a great way to invest in the stock market and accumulate wealth. They offer a steady income stream with payouts at specified dates, a lower risk than many other investments, and can be traded whenever you want. Dividends are payments made to shareholders by companies for the right to own their stock. The best form of dividend payment is through cash. Dividend stocks are an excellent way to earn both full-time and passive income. You just need to do research and invest in the right company. You can invest in companies such as Johnson & Johnson, Microsoft, Walmart, Coca-Cola, and etc. In all, we must note that investing is a long-term game. Therefore, it's better to start with small amounts of money. If you're new to the world of investment and have never even thought about it, this is the perfect time to start. You can start investing in low-risk index funds through brokerages like Charles Schwab, Vanguard, or Webull. You can use stock market investments to build your wealth so that when life throws curveballs at us later down the road, you will know how much money we have saved up for yourself for when times get tough again. Lastly, check out our other videos to learn more about making money and deepen your financial education. Also, consider re-watching the video to ensure you caught all the tips. If you liked this video, subscribe and share with your friends. Thank you for watching.